All right, welcome everyone to the DEO Growth Secrets podcast. We have another expert here that's going to help you along with your journey. Today, I have Shawn Johnson, Vice President of the Business Development for Treloar Heisel. Along with him, we have Lara Blaine, who is a Property and Casualty Manager. And we are going to talk today about retirement planning and insurance planning from the beginning of your journey, whether you're deciding to open a practice, maybe you're just getting started, all the way to deciding to scale, deciding to add associates, add locations, and all those considerations in between. So Shawn, do you want to say hello and maybe give any more detail to folks who are listening about who you are and where you're from?
Yeah, great. Thanks, Jake. Happy to be here. Laura and I really appreciate the invitation. Treloar Heisel is specifically focused on working with dentists and physicians and doctors. And what we do is we help them with their personal insurances, like disability, life insurance, long-term care, auto, home, those type of things, as well as their professional insurances, your professional liability malpractice, your business policies, workers' comp, employment practice liability. And then we can also help you with installing retirement plans in your office, as well as comprehensive fee-based fiduciary type financial planning. So our heart is to look at you from the full comprehensive perspective and partner with you to help you reach your goals. We've been working with dentists for over 65 years. We're a national firm. We have over 27,000 dentists as clients in some way. We're really proud to provide our services to them and partner with them. And today I also have a content expert who leads our property and casualty division to help us with some of the more detailed explanations of some of the property casualty questions we might have. So thanks.
Amazing. 20, I mean, that's almost unbelievable how many dentists you guys work with. You've been around over 60 years. You've personally been with the business for over 20 years. So much experience. And when it comes to insurance and retirement planning, it's one of those things when you're excited and ambitious about growing. It's one of those things it's like, wait, do I need to think about 20 years down the road? I'm so excited about right now, right? Or do I need to think about when things go bad? I think the folks, it's funny, the weather dentists have been around for a while and have the scars. They know, yes, you need to be thinking about these things from the beginning. You need to be protecting yourself, because if you're successful, then you're going to have, like you want to be, right? Which you're probably going to be, then you need to have these things set. So super, super important. And Lara, would you want to give a little bit for yourself as well? A little introduction on what you're working with?
Yeah, sure. Like Shawn said, I work in our property and casualty department, so I hope to be able to add in a little bit of, insight on what our doctors are looking for from, their first job out of school versus our seasoned doctors that have been in practice for years and looking to grow and maybe sell their practice. I've been with the company for almost 15 years as well, so I have some background and some knowledge to add to the talk.
You've seen it. You guys have seen it all between the two of you.
Yeah,
so
definitely.
So let's talk about that journey, right? So a lot of our audience, we kind of attract the most ambitious dentists. So we work with folks that are starting the multiple locations track, and then we have a lot of folks that are just starting out that know they need to go to the people who have been there and done that, and so they listen as well. So let's just, for those people that are kind of thinking about starting their first location, what are the things they should be thinking about as they, when it comes to insurance, when it comes to retirement? Shawn, what advice would you give them?
Well, I think that the bank that they supposedly I assume they're going to be taking a loan out to start their practice, and it could be substantial, right? And they may be buying or starting the practice, and they may also at the same time be buying the real estate or could be leasing it. So the bank is going to make some requirements for them to gain approval. One of the things that Laura and I talk about is the bank is giving you the minimum requirements for approval. Doesn't necessarily mean you're insuring yourself properly. Are you doing the bare minimum? Are you being responsible in your protection? And I think from the very beginning, the foundation is they want to have proof of disability insurance. And that's because you are the production line. You create the entire revenue stream for that practice. If you're not there in the beginning, unless you have associates, there's no production coming in, there's no revenue. So they're going to want to have proof of disability insurance. They may want proof of life insurance, depending upon the type of loan. And then they also want to have the business insurances put together. If you're doing construction and you're doing a build out, then you would need to look at a builder's risk and general liability coverage. If you're buying a practice that's already, been put together and you're just basically buying that practice as is with no construction, then you need to get your business owner's policy. But there's a big difference with that one from the very beginning. A lot of advisors in insurance, agents in insurance will provide business owner's policy coverage when there's a build out being done. And we've seen instances where, hey, if you have a claim, you're not going to get that claim paid because there's construction happening at that office. So that's in the beginning, that's what you're looking for. And then of course, once you get the office set up, then you're going to have to worry about the business owner's policy to replace your contents, your employees possibly suing you, which we've had that happen to young doctors. So there's unemployment practice insurance, liability insurance. There's data breach, and we can go on about all kinds of things that we've had in the ransomware and data cyber area. And then there's workers' comp as well. So those are kind of the fundamentals. There's the disability and life side, as well as the property and casualty side that we worry about in the very beginning.
Yeah, it's interesting. I remember starting out for myself, just had no idea how important this kind of thing is. And then really you hear these stories over time, right? So we're going to get to, if you're looking at multiple locations, you're looking at growing your team. But Shawn, maybe just for my own, what are some of the stories you've heard out there where insurance has become absolutely crucial? You've got to be seeing these come across your desk all the time.
I mean, yeah, Laura takes the calls, our advisors across the nation take the calls. From a disability perspective, when you have 27,000 dentists, you're going to have a lot of stories out there, right? So, and most of the time I don't really have to sell a dentist on the fact that you need insurance. But I had, an endodontist client of mine just throw some luggage in the back of their trunk and hurt their finger. Didn't think it was really that hurt, but then they went back and started doing more procedures. Turns out there was a fracture there, and it just got worse and worse and worse, and had to go on disability claim for something that simple. Pediatric dentist going down and skiing and having an accident and tearing their predominant thumb and being totally disabled. They're still able to manage their practice, but they're done clinically. So we have to talk really much about need. People know they need to have it. What I do see is that often they're underinsured or they skimp on it in the beginning, and it's protecting your most valuable asset. So disability insurance, you have your personal coverage to keep your family running, but you also need business loan protection disability to pay back your loan if you're disabled, if you have a business loan. And then you should consider business overhead expense disability insurance to reimburse the practice for practice expenses if you're out. So those are some claims, just disability alone that you can be wiped out. If you're running at $60,000, $70,000 a month of expenses and you become disabled and the receivables end within 30 days and you're out for 6 months, 7 months, 8 months, taking $500,000 out of your investments to pay for that or from another area of your assets, you can't imagine how that impacts how much you have left at the end of your career, right? So having insurances in place are vital. And then when it comes to property and casualty insurance, I'll give an example. I had a doctor buy a practice, and of course, when you're buying a practice, you're buying the assets, but you're also buying the problems. And within a few weeks, he was putting in new procedures and new software, and one of his staff members couldn't learn the new procedures, the new software, and he had to let them go, and he was sued for age discrimination. Well, having the right amount of employment practice liability insurance saved his entire practice, right? Yeah. Laura, you have some examples probably from a business owner's policy.
Yeah, definitely. I think one of the larger claims that we saw was a ransomware claim. Dentists might not think of that. That's one of the things that are covered on that data breach and the cyber liability, and they can be rather large. We've seen them as much as 300,000 just recently, and that's something that we're seeing more and more regularly. And then we've had things like total losses from a tornado, a dumpster fire, which people joke about dumpster fires, but we've actually had practices total loss from a dumpster fire from behind the building. We've had a car drive through a practice. And not only is this, property that's needing replaced or repaired, but then that's that time you're down, or, a rental location that you need to, quickly set up to be able to see your patients. You don't want to lose your patients during that time. And so you need to make sure you have the correct insurance in place to cover those things as well. It's not just, I need this limit because this is how much my building costs. There are so many other things to take into consideration. And another thing is general liability. We have doctors tell us, I'm a pediatric dentist. No one's going to slip and fall. Everything's fine. A pediatric dentist, your patient isn't the only one coming in. Grandma's coming in, the siblings are coming in. I got a call, someone, open the waiting room door to call the next patient, little brother's finger smashed in the hinges of the door. So, those are all things you might not think about, but we get calls on that stuff pretty regularly.
Yeah, and Jake, I would say, when we got the call that a tornado went through and just is pretty much practice under a year old,
Brand new.
significant investment, and we're talking down to the ground. I mean, your heart just drops for that person. I would say that you should be very mindful when you go to figure out who you want to partner with for these things. Do they understand how the policy should be set up? Because it's just like in dentistry. Sometimes there's a bad treatment plan. Are they working with an expert that understands how they should be set up, and are they working with somebody that's seen a claim before and can assist you in your time of need? I mean, you wouldn't believe what we see when we take over policies and how much more we can help somebody because of the volume that we do and how involved we are and our reputation in the industry with these companies.
And there's coverage we put on specifically for dentists. We see a lot of other policies come to us and they say, oh, can you beat the price on this? That's not the most important thing. We go through the coverages and see this isn't set up as a dental practice policy. This is set up as a general business policy. And there's a lot more to a dental office than just a general policy.
Yeah, it's just one of those things that's easy to kind of think about it from a cost mindset, but when it comes to dealing with a big operation, you have a lot of moving parts. When again, if you're successful, right? Think about this as a dentist. If you're starting out, if you're successful, you're gonna have all these problems. It's just not something that you want to skimp out on. And one of my favorite questions, just for entertainment value, is just particular in this industry. Wild things happen all the time. So many wild things happen, and we would deal with hundreds of multiple location docs. And my favorite thing is we'll get in a room like, hey guys, just tell me the craziest thing in the past week that's happened. Always something wild because you're dealing with a lot of things. And so, we deal with a lot of employees, you become a target. All these things are just super, super important to have buttoned down. So yes, I mean, I think by now people kind of know that they need to have a policy, that the policy is all set. They know how important it is. They got to have a 360-degree kind of look at it. Do you guys do like auditing, or would you take a look at current policies and basically show everyone where? Because I've again personally had this done as well, just on the personal side. And gosh, I mean, for 10 years, I had no idea I was underinsured in certain spots of my life. So you guys will take somebody's policies and analyze them?
Love it. Love it. And, all of our advisors, all day long is find solutions for dentists, right? So, and we understand that you need to be with the patient. So we can have an office manager, or you can put all your policies on the table. We can walk in, sift through everything while you're with patients, and then say, here's what we see. Keep this. This looks great. We need to really address these areas. And then you'll leave feeling a lot more protected. And you'll realize that, hey, I did some things right? Some of the stuff I did was great. But boy, I kind of neglected those other things because, hey, human nature is you get your policies enforced, you throw them in a drawer and you go practice. Right?
Yeah, I mean, yeah, it's only upside, right? It's only upside to get these things audited or assessed and understand exactly where you're at. And also multiple times, so you got to learn where you're at. You got to kind of learn where your protections. And as you grow, maybe that's a segue into kind of like the growth mindset here, unless we want to go anything with retirement planning as well in the start. But as you grow, it changes, right? Like your vulnerabilities change, different things pop up. So you got to constantly be assessing this. Anything as somebody that's starting out, or maybe it's just starting to think about this on the retirement planning side, because I mean they kind of go hand in hand.
Well, we always recommend that when you first start out with any surplus, invest in your business, because that is going to be where you get the biggest return. So whatever it takes to get that business up and running, don't take money that you put in a retirement plan, put it towards your marketing, really get things moving, whatever you need in assistance perspective. But once you're there and things are cooking, you have a surplus, then a retirement plan is one of the best ways to have asset building and growth opportunities. So I would just say that we monitor that typically in the first or second year. You have a surplus. Now we're looking at, can you afford to take that money and save it in a tax advantage way? Or do you need it for running the practice or for living personally, right? But as soon as possible, get to work on that, especially with how hard it is to retain employees and attract employees. I think more than ever, it used to be a doctor benefit, and now people are looking at it as an employee benefit as well as building wealth for the doctor, because it is so hard to attract and retain employees in this environment. And then typically you start out, you just have to get it tested. You get your census tested, so that you can see what plan might be best for you. The goal typically is that when we look at all the contributions and costs you have to make to your employees to make it compliant, are you getting a bigger tax benefit from your deductible contribution to that plan, right? So if you're able to put, let's just say $60,000 for a round number, it's a little bit more than that. You're probably saving around 24 grand in taxes that year. How much are the contributions costing you, right?
Right.
We can make decisions. Is that the right type of plan to be in your office? But yeah, getting that plan up and running as soon as it's a surplus is really important. And then from a scalability perspective, as things change, you bring on a partner, maybe a partner and an associate, we've got to keep on testing it and making sure it still works. And is there more opportunity to have enough? So that's a defined contribution plan. That'd be a 401k that you start out with. But as you grow and you have more of a surplus, could you put a defined benefit plan on top? And I know that we're kind of, this is a podcast, we don't want to drone on and on about this, but it's always with all these things. Don't just set it and forget it. Continue to evaluate. Take that meeting with your advisor. Have us come and give you a second opinion and see if there's opportunity for additional tax advantage savings through a defined benefit plan or a different design through a defined contribution plan. And are you truly insured properly? On the insurance, I would even mention simple things like the nuances of malpractice insurance. When I first started 25 years ago, we were recommending $1 million per lawsuit, $3 million for all lawsuits. I have people still carrying that today. Frequency is up, severity is up. And I think people think that, well, if I'm paying X for $1 million of coverage and I want 5 million, I got to pay 5X for 5 million. That's not the case. You go up to 5 million and probably have a 15% increase in price. So it's a value proposition, so I think just all those discussions should be played out so you really understand what you have and is the juice worth the squeeze? Is it worth paying more for that added peace of mind?
Yeah, it's another one where you want to be able to just outsource it completely. And the key is to finding the right partner, right? But at the end of the day, you really kind of have to stay involved and you got to stay kind of on top of this. The easiest way is cadence. There's once a year that we're meeting and here's our agenda. We're just making sure everything, maybe we don't make any changes, but we're just making sure that everything is set, almost like an assessment. But you do not want to set it and forget it. It's one of the toughest things to set and forget. Although it's so easy to do that, right? Because you're like, oh, it's taken care of. So you guys are meeting with your clients, all 27,000, probably as on a regular basis for the retirement ones. But you're kind of going over this regularly.
On both fronts, we aggressively reach out several times a year to, if not more, to try to schedule that review, And I would say if you look at those clients, our advisors probably get maybe 15 to 20% of their clients to agree to do a review annually if it's just the insurance relationship. Mm-hmm. And that tells you that how many people out there are just not finding time to take the important step of sitting down with their insurance advisor to make sure they're still protected properly.
Yeah. Well, a great example, Lara, is ransomware. So with all of the members we work with in our community, I would 100% agree that is massively increasing. I think 300-400 is what I've heard. Almost right off the bat, like you're going to get about 300K. As soon as you get attacked, boom, just get 300K. But that's something that would come up in the last couple of years. If you're not doing a regular assessment, then you're not going to be thinking about that. I'm not sure if you have anything to add.
Yeah, Laura, what are the limits that we can go to now, now that people understand it and are curious?
Honestly, it depends on the size of the practice. That's a coverage we can add right onto the business owner's policy. maybe for, our starting practices and smaller practices. And then when you get into, 10 locations, 15 locations, that's a policy that we pull off of the business owners. We write a separate policy, and maybe they need a $5 million limit or a $10 million limit, and we have that available, and we kind of assess based on the growth plan and the size of the practice, what type of coverage would be the best fit.
It's a huge one. Again, just regular, top of mindness. So as I'm adding locations, as I'm adding associates, as I'm adding employees, anything different you'd be thinking about? Anything additional? Shawn, we'll start with you. How would you be thinking about that?
Well, I think that on your personal coverages, if you're adding associates and you're making more money, so you need to increase your disability, and people are woefully underinsured for their family for life insurance as well. People making $500,000-$600,000 carrying $2 million of life insurance, and they think it's enough. So be mindful of that. But as far as scalability with your practice, we want to make sure you're with quality companies that can cover you in multiple states if you have those type of expansion desires. And we want to have systems in place so that you have everything at your fingertips, so that we can take it to market and make sure that you're with the best carrier as your situation changes, and that you have some consistency and control of the coverages that the people that work for you should have. And Laura and I talk about this, you start out, and let's say that you're now, you own, or you're a partner in 5 locations, and you have 10 associates. Each one of them has you're just reimbursing them maybe for their malpractice insurance. You just need proof of coverage. They might not be with LLC care. They might not have the right limits. And how are you tracking all this? And that's not a scalable situation, right? So there's some things that we have you do, both from the business owner's policies perspective, as well as the malpractice or professional liability perspective, from a housekeeping and from a coverage and from a scalability perspective, to just save yourself a lot of aggravation. So Laura, we were talking a little bit about, list bills for malpractice. We were talking about keeping track of, your building characteristics, and those things are updated, if you want to speak on that a little bit.
Yeah, so on the malpractice side of it, we see a lot of practice owners require a certain carrier for their associates, and that really does keep things more consistent. It's a carrier that the owner trusts and that they've maybe used for years. So they require the same carrier and the same limits. And if we can get on a common renewal date or a group billing plan, that makes it even more convenient for everyone involved. And even, from the advisor side of it, when we do those renewal calls and touch base, then we're able to talk about all of those policies all at the same time too, and make any changes necessary. And then on the business owner side of it, as you're growing, of course, your work comp payroll is going to increase. You're probably going to want to increase your employment practice liability because you have more employees. You're going to want to increase the cyber and the data breach coverage because you have more locations, more patient files, more data that could be stolen. And then also on the property side of things, as you're acquiring new buildings, do you remember when the roof was replaced on your second location? When did we update the plumbing and the electrical on, building 5? So I think it's, we recommend keeping like a statement of value sheet, keep an Excel sheet, put each location on there, have a column for, updates to electrical, updates to plumbing, square footage, when the roof was replaced, building value, things like that, because you're going to know that information when you purchase the building or when you get those things done. And then 5 years down the road, you're going to think, now when was that? What year was that? What did we have done? And for us to market those policies, send us that Excel file, and it's that easy. That's basically the application. So that's one of the recommendations.
It's so cumbersome when that comes up, right? I mean, it's all it is being organized and having people that are helping you stay organized with it. But it's the difference between, taking weeks, kind of finding these things, going back, emailing, or just having it all ready to go.
Not to mention ownership. Like, that's so important to understand what entity owns what and how they're organized when it comes to the coverage. I mean, for my clients, when it gets complicated, I have like diagrams that I make. And when we do a review, I'm like, is this still how it looks? Okay,
Mhm.
that is truly impactful on the property and casualty side of the business for us to understand how they should be set up.
Yeah. I mean, any other I mean, I think you just talked about the documents needed as you scale. Anything else? You just gonna just keep organized. As again, if you're listening and you're planning on growth and you're successful, just know these are the things you're gonna have. So you can predict them now. You're probably gonna be successful. And so it's good to start thinking about anything else on the document side, or staying organized side as you grow.
I think Laura did a good job on that. I think that for me, it's think value instead of cost.
Right.
We don't want to be we don't want coverage to be the highest cost player, but we certainly want to make sure you're protected properly. And we're looking at, like I said, company ratings, which tell us, all rating does is tell us if that insurance company is in a position to pay future claims. That's the reason we buy. So we're looking at that. We're looking at, hey, will they be able to provide coverage in all the different states that you might plan to expand into? So you know that you can have it all with one carrier, consolidating coverages. And really, I think that what I would say is, if you're looking at, I got to take care of disability, business overhead, all the stuff we talked about, as well as property and casualty, malpractice, to have it all under one roof and with one concierge level service provider will save you a tremendous amount of time. You don't want to have 10 different agents that you reach out to piecemeal this together. Number one, it's a headache for you. And number two, when you piecemeal things together, typically you don't get the outcome that you want.
Yeah. You just, I mean, especially working with 27,000 dentists, you want to work with somebody who's just been there, done this. One of the things I will definitely say is when you start talking to the higher level dentists and leaders in the industry, everyone's cost conscious, but that's not how they're making the decision, because 3 years down the road, you need people that are gonna be good, so that you can free up your time to go manage the associates, to manage the employees, to solve big problems, tech problems, things like that. So it's cost is a secondary thing. It's really quality. Those are the referrals that are sent around first, and then that are within a good cost range. It can't be crazy. And then and then some people who know exactly what they're doing. So I think people appreciate that. Laura, anything else you'd add for those folks listening?
No, I think we've covered most of it. Of course, there are many, many details that we haven't covered. But this is a nice overview of it. Yeah, I think the most important thing is to work with someone who understands your business.
Yeah,
Exactly.
the only thing that I really haven't touched on with the insurance is if you have a partner or multiple partners, making sure that you're having routine valuations of the practice and that your buy-sell agreement is set up properly.
Yeah.
Again, with that buy-sell agreement, are you funding it with life insurance or disability buy-sell? And have you looked at that and have you updated it? Everything's more expensive. If you need to rebuild your practice because of a fire, it's going to cost more than what your current coverages probably are in place, because inflation, the value of practice has gone up. We need to be aware of all those other pieces. And if you have partners in the partnership agreement, you probably want to have it up to date. And if you're growing and you plan to, look to sell, you want to have that valuation and all those things, but in an organized fashion with great coverage so that you look really attractive when you go to sell.
It's a great point. Yeah. And again, it's all that which begins well ends well. So you can sort this out in the beginning of your partnerships and have it all documented out. And it's just it's all streamlined. So that's another one that you're going to encounter further down the journey that's new, right? And they'll pop up if you're successful. So, well, thanks so much, Shawn. Thanks so much, Laura. It's really important topic. It's probably not the first topic people think about when things are going well, when they get out of bed in the morning, but that's when you want to think about it, right? You don't wait until it's too late and you got claims, things going wrong and things happening. So get this in order, get organized, know where you're at. I think that's the first step. And then you can just build a plan. It's pretty straightforward, really, if you have the right people working on it for you. So thanks so much, everyone. Thanks, Shawn. Thanks, Laura. And yeah, we'll continue to keep the industry safe.
Thanks, Jake.
Thank you.
Thanks, guys.